Picture this. A 22-year-old kid with just $500 in his bank account turns it into $1 million in less than 5 years, all by investing in the stock market. Sounds like a fairy tale, right? But here's the kicker. Nobody told him the real secrets of the stock market, and he almost lost it all. What are those secrets? Stick around, because I'm about to reveal what no one tells you about the stock market, and trust me, it's not what you think. You've probably heard the stock market is a place where millionaires play, where you need a fancy suit, a corner, office, or a PhD in finance to even stand a chance. Or maybe you think it's a casino, where you can just throw money at a hot stock tip from your cousin's friend and wake up rich. If that's you, you're not alone. Millions of people are intimidated by the stock market, or worse, they dive in headfirst without knowing the hidden traps waiting to wipe them out. The problem? Nobody talks about the real game, the stuff Wall Street pros, financial gurus, and even your know-it-all uncle won't tell you. So let's pull back the curtain and dive into the truths that could save you thousands or even make you millions. First off, the stock market isn't just for the rich. Think you need a fat bank account to start investing? Wrong. You can buy into some of the biggest companies in the world like Apple, Tesla, or Amazon with as little as $10. Apps like Robinhood or Webull let you buy fractional shares, meaning you can own a tiny piece of a company without dropping thousands. Imagine owning a slice of Netflix for the price of a coffee. Sounds doable, right? But here's the catch. Just because you can start small doesn't mean you should jump in blind. Most beginners think they can just pick a stock, watch it, soar, and cash out. That's where the first big surprise hits. The stock market is not a get-rich-quick scheme. You've seen those TikTok gurus flaunting their Lambos, claiming they made millions trading penny stocks in a week. Spoiler alert, they're either lying or they got lucky, and luck runs out. The truth is, the stock market is a long game. Data shows that the average annual return of the S&P 500, which tracks the 500 biggest companies in the US, is about 10% over time. That means if you invest $1,000 today, you might have $2,600 in 10 years. Not bad, right? But here's the twist. That's only if you don't panic and sell when the market crashes. And trust me, it will crash. In 2008, the market dropped 50%. In 2020, it tanked 34% in a month. The secret nobody tells you. Those crashes are actually your best friend. When stocks go on sale, smart investors buy more, not run away. But most people, they sell at the bottom and cry about it later. Of crying. Let's talk about the real risk in the stock market. Everyone knows investing is risky, but what nobody tells you is that risk isn't some monster hiding in the shadows, it's something you can control. Imagine you're at a buffet. You wouldn't pile your plate with just one type of food, right? If that dish is bad, you're stuck with nothing. The stock market is the same. If you put all your money into one stock, like say a trendy tech company, and it tanks, you're toast. But if you spread your money across different stocks, industries, or even other assets like bonds or ETFs, you're building a safety net. This is called diversification, and it's like wearing a seatbelt while driving. You might still hit a bump, but you won't go flying through the windshield. Here's the shocker. Even professional investors mess this up. In 2021, a single stock, GameStop, went from $18 to $483 in weeks, then crashed back down. People who bet everything on it lost their shirts. The lesson? Don't put all your eggs in one basket, no matter how hot it seems. But here's where things get really juicy. The stock market isn't just about numbers and charts. A psychological battlefield. Your emotions are your worst enemy. Imagine this. You buy a stock at $100, and it shoots up to $150. You're feeling like a genius, ready to book a yacht for the weekend. Then, out of nowhere, it drops to $80. Your stomach sinks. You can't sleep. You're refreshing your trading app every 5 seconds, sweating bullets. Most people sell at that point, locking in a loss. But here's the secret. Nobody whispers. That drop is usually temporary. If you're invested in a solid company, the price often bounces back. The data backs this up. Stocks like Microsoft and Coca-Cola have weathered countless dips over decades and still come out on top. The trick? Stay calm and stick to your plan. But that's easier said than done when your brain is screaming, sell everything. The real pros, they train themselves to ignore those gut punches and focus on the long term. Now, let's talk about something nobody likes to admit. Not all stocks are created equal. You might think, hey, I'll just buy the cheapest stock I can find. Big mistake. Cheap stocks are often cheap for a reason, like a car with a busted engine. Penny stocks, those trading under $5, are especially dangerous. They're often tied to shaky companies with no profits or sketchy management. In 2020, over 60% of penny stocks lost value, while blue-chip stocks like Walmart or Johnson & Johnson kept climbing. The secret here? Focus on quality over price. Look for companies with strong profits, good leadership, and a track record of growth. It's like dating. You don't want to chase the flashiest option. You want someone reliable who's in it for the long haul. But how do you find these companies? That's where research comes in. And don't worry, you don't need a finance degree for it. Here's another bombshell nobody talks about. Fees can destroy your profits. Imagine you're at a restaurant. And every time you take a bite, the waiter charges you $1. That's what trading fees, management fees, or expense ratios do to your investments. Some brokers charge $5 or $10 per trade, and mutual funds might skim 1 to 2% of your money every year. Doesn't sound like much, right? Wrong. If you invest $10,000 and pay a 1% fee annually, you could lose over $3,000 in 20 years due to compounding. The fix use low-cost brokers like Fidelity or Vanguard, and stick to index funds or ETFs with expense ratios below 0.1%. It's like choosing a streaming service. Why pay for cable when you can get Netflix for less? But here's the biggest secret of all. You don't need to be a genius to win at the stock market. Wall Street wants you to think it's a secret club for Ivy League grads with Not true. The average investor can beat the pros by keeping it simple. Here's how. Invest regularly, even if it's just $20 a month. Pick broad market index funds, like one that tracks the S&P 500, and hold them for years. This strategy, called dollar cost averaging, smooths out the market's ups and downs. Warren Buffett, one of the richest guys on the planet, bets on this approach. In fact, he once wagered $1 million that a simple S&P 500 index fund would outperform a group of fancy hedge funds over 10 years. Guess what? He won. The secret nobody tells you. Consistency beats complexity every time now. Let's flip the script for a second. What happens if you ignore all this? Picture yourself 5 years from now, still scrolling through stock tips on Reddit, chasing the next meme stock, and wondering why your bank account is still empty. Or worse, you're too scared to start, so you leave your money in a savings account earning 0.01% interest while inflation eats it alive. That's the real cost of not knowing these secrets. But the good news, you don't have to be that person. You can start today, even with a tiny amount, and build wealth over time. The stock market isn't a slot machine, it's a ladder. Each step you take gets you closer to financial freedom. So, what's the takeaway? The stock market isn't as scary or exclusive as it seems, but it's not a free ride either. Start small, stay patient, diversify, keep your emotions in check. Pick quality companies, watch out for fees, and don't overcomplicate it. These are the truths nobody tells you, but now you know them. If you're ready to take control of your money, open a brokerage account today. It takes 10 minutes, and you can start with as little as $10. Don't wait for the perfect moment, it doesn't exist. The best time to start was 10 years ago. The second best time. Right now, if you found this eye-opening, smash that like button to spread the word and help others avoid the stock market's hidden traps. And if you want more no BS tips on investing, hit that subscribe button and turn on notifications. Let's build wealth together. See you in the next video.